Hi, Davide Biocchi speaking here, and this is my weekly intermarket analysis. Let's start as usual with the euro dollar, that as we can see is already and still on the same support it was before, area around 1.05 worked really good. There was an attempt to go above here the price of 1.06, but the market stopped exactly at the first resistance that we can find here. So will it continue? Well, this is the week of the Federal Reserve, and also lot of we have a bunch of macroeconomic data coming this week. So I think that potentially we can see the market moving above or below this level. Let's say after this data that will end with the payrolls on Friday. So let's see what is going to happen here. Let's immediately after we switch to the commodities like the crude oil that let's say is in free level. So we have the area of the 82, $83 per barrel that is now working as a support. Below this, we have the area of $78 dollars per barrel here. We have another area that is 82, 83 to $88 per barrel. That is where the market is moving right now and probably can continue during this week. Despite this, if the market will go above 88, probably the target of 93, $94 per barrel will be reached again, as we can see here. The situation is very clear. What is really interesting is what happened on the gold that was able to move really strong again above the level of 2000. As we can see here, we had seen three, let's say, all-time high, 2080 in a row. The first one was a little bit back during the COVID, and then these other two coming with the Ukrainian war and with the problems with the US regional banks. So the market is doing a really good movement, a real recovery here. And this is because, let's say, investors mainly see the gold as a safe haven. And imagine what could happen here if we do not have such relevant yields in the bond market. So this is a very strong situation. And for what concerning the bonds, let me introduce you this treasury long-term chart that is showing us a really interesting, let's say, potential accumulation. Why do I say accumulation? Because I see the volume. We have real strong traded volume here. And this is telling me that probably someone is buying day by day this asset through this ETF. And this is really relevant. Let's switch immediately after to stock indices, and let's start with the European one. Today, the Euro Stock 50 is recovering from the minimum that was hit here. And let's say it could be, let's go in more detail, it could be more relevant if we could see the price moving above the level of 4,100. There is a sideway where the market is in between since days, and above the price of 4,100, there can be a quite more interesting situation. Well, the DAX is weaker, remaining in Europe compared to the Eurostock 50, but more or less we have the same figure. The market was, let's say, on a support. The test was doing good, and we have to see the market above this just to say that the reaction could be more complete in a certain way. What happened in the last week on the US indices is really important. The Nasdaq went below the level of August and then September and October, and let's say the test of the previous level is something that we could expect, even if more effective support are a little bit below. So let's see what is going to happen. But going back to Friday market session, money came back, the flow came back to buy that big seven sisters, let's say, from Apple to Tesla to Amazon and Microsoft. They were all bought on Friday. So let's see what is going to happen in this week, where we will have on Thursday the reporting of Apple, when we will have on Wednesday the, let's say, the press conference of Mr. Powell. So we will have a big impact on the indices. And for what concerning the S&P 500, finally the area of 4,200, 4,150. So I mean, what was previously a very relevant and strong resistance, and right now we could assume that could work as a support. Let's say the market is in between. So there was congestion here. We can expect congestion to remain here and see what is going to happen. To me, it seems that, let's say, the stock indices are more weak than the bonds, are more weak than the commodities, and so let's say the game is played somewhere else. So let's see what is going to happen on bonds, and that will be the main guidance of the market. So thank you very much for being here with me. See you soon. Bye bye. Ciao from Italy.